Up, guys? Yeah, I'm fine. The fuck happened to the... What happened to the flip points? What the fuck? That's a big move. It's got to be something big near the money. Um, I didn't say it had to be sold. Let's see. Bot calls 5660. 5650. Maybe it's these calls out of the money at 5760. That's the only thing that looks big enough to move it. It's like sold calls 5760, 6600. A flow point moving up like that would be bearish. Yeah, a little bit. Hmm. Could be part of a spread, maybe. Maybe like sold 5710. There's two that I see that could be somewhat impactful. One's like puts at 5600. Then there's like a 5700, 5710 looking spread. And then there's 5760 sold calls. Hmm. I want to go with the sold calls because like the move up wasn't linear. Like it went out, like it looks like there were two. Like this position looks like it was just one straight shot up, but then it kept rising after that. Yeah, above 5650, this should be able to push out like 5685 or 5700. There's not a lot of resistance to the upside. Well, if Delta gets to positive. I mean, something big enough came in to pull the market maker away from what is obviously like the lower exposure area. Like if you look where the delta and gamma flips were here, they were kind of straddling that like little low exposure range around 40. And something moved significantly enough to shift that range higher by like $10, almost exactly. So I would say out of the money sold calls, or I don't really see any in the money bought puts anywhere of any decent size. There's some down at like 45, 40, 35. But maybe Bears just trying to keep the bulls off of delta neutral. There were like 20K each of 5650, 5700, 5600s for 321 to 620. Hmm. Generally, like gamma moving closer to spot is bearish. Look like a 20K contract synth roll from March to June. Oh, maybe they're rolling. I mean, but this only tracks 0 DTE contracts. So it might be that they're like trying to hedge off their short-term exposure while rolling. Demand is definitely to the upside right now. By like a lot. But not a lot of that is close to spot. So it seems like some people are expecting some pretty insane moves from FOMC. Like there's a lot of demand up around like 57.10, 15. But then out at like 57.45, 55, 70. It seems like, if anything, there's just like a lot of tail risk. And people are trying to get exposure to that. That's all because we can't afford out the money options. Yeah, that's probably true. You know, you could just. Never mind. Were you going to say spreads? No. There's 3 downside gaps. 45, 51, and 60. Spreads are good until they aren't. I mean, they're pretty good right now because VIX is at 20. And calls are massively overpriced. Did you get a 5640? No. Hmm. Bitcoin's up a bunch today. So is dollar. Ooh, yen's back above 150. 10 years at 4.3 already. Yep. Lorpa, will you write me a song? I know you've got a lot of free time these days. I want a sad song like Dorks. I'll do my best. How are you enjoying your first day of sort of being fired, maybe? Shell shocked? Son of a bitch. Smart. Color realistic budget. Just spend $0 in the next 6 months and I'm good. Like where your head's at. Hmm. It's okay. We have GS. We just have to make it way bigger really fast. That's why I spent the last year grinding my face off. Not quite a golden parachute. It's more like a parachute with like holes in it. It's like base jumping by holding your boxers over your head. Mache. Paper mache. Like this. Well, yeah, one of those. But a parachute. Why are you sending me the Quran? Popcorn. Secret DD. How does your power go out? I think they were doing repairs somewhere in the building. And the door guy said that they put up notices last week, but I didn't see them. Typo? He meant to send you quinoa? I don't think so. I'm pretty sure he sent me a part of the like Surah al Azab. People ask you about the hour, say knowledge of it is only with Allah, and that may let you know perhaps the hour is near. Which I think he thinks translates to wind down, but I'm not entirely sure. Assalamu alaikum, Greg. You're not gonna bait me that easily, Sistani. Did he send you the Quran in Arabic or translate it into Chinese? In Arabic. Persians aren't Muslim, though. Well, they're not Zoroastrians. Not since, like, the 7th fucking century. What do you think they are? Is 5,700 and beyond really on the table here? Depends on the Fed decision and the dot plot. They pulling back any of the massive sold calls used to stop the breakout on GME. It happened on a couple other stocks. I don't know. It's getting close to OPEX, so I need to figure that some sold calls would be pulling back. Also approaching earnings, so vol should be pushing up, which makes conditions unfavorable for volatility sellers, that is. Foreign exchange arbitrage has stayed pretty positive the last couple of days. I'd say that there's a little bit of shorting in the underlying and maybe on like IJJ right now. My power was out this morning when I woke up, so I didn't get anything written up. How regularly do you leg out of spreads versus just closing the entire position? Sold or bought. Debit spreads, I usually just close them. Sold spreads, very frequently I'll like close the short leg if they're threatened. And as long as they're within range of like the current price action, I'll leave like the long leg open. The dot plot may matter some, but JPEG never says anything we don't already know. There's uncertainty. He will keep repeating that narrative. I think more of the focus is going to be on whether whether the Fed feels comfortable holding rates or whether they want to push for like a cut before September. Because I think, or if they were to cut today, which is very unlikely, but if they were, I think that would be seen as a lack of confidence in the economic situation. That they're assuming that unemployment is going to go up and growth is going to slow. I think holding rates where they're at is going to be seen as at least confidence that they don't need to make a decision yet. Yeah, if there's a cut at the next meeting, it's going to be a big deal. Because right now, for June, they're pricing in, like Fed Fund futures are pricing in like 0.9 or 0.09. So, yeah, they're not pricing in basically any rate cut in June at all. I think for September Fed Fund futures, they're pricing in like right around 0.3. And that's been falling for the last couple of days. I don't think failing here is very good, but there's some support at 50. What is JPA's reign of cuckery over? Trump won't get rid of him, I don't think. Trump appointed him. Or did Obama? Hmm. No, it was Trump. Oh no, it was Obama. No, he was oh no. He was made chairman by Trump. Obama appointed him to the board of governors. Thanks, J Dog. Could the Fed choose not to give a dot plot? That's not going to happen. They may leave it the same, which I think is a very high likelihood. I did see your DM. I'm still confused as to why you're sending me pieces of the Quran in Arabic, but the hour may be nigh. Yes, I read it. Exactly. He's trying to get you deported. I know. Do you think if those April tariffs come in, that Trump will carve out exemptions based on donations and obeisance to companies or countries that come crawling to him? Oh, of course. I sold put calls. Have a nice day. So you sold calls? Both? I'm also straddled. You don't need tariff exemptions if you move production to the USA. So you're gonna pay, instead of paying 25%, you're gonna pay 100% more for your cost of labor. Genius. What kind of move you looking for before even considering your straddle? I already have a straddle. Labor costs aren't real. Neither are tariffs. It's too late to make America great again. We're arguably the richest country in the world with one of the highest standards of living. I don't know why we feel the incessant need to make it better. I think everybody in America just needs to go visit a country with a GDP that's like under 50 billion. 3 months. 3 months in a country with a GDP under 50 billion. People in my movies and TV ain't white enough, Gherk. That ain't great. Oh, Jesus fuck. A politician didn't win. I'm gonna move countries. Oh, shut up. Also, why not? That mean is actually abolishing billionaires instead of enriching them. Some people just really love the taste of billionaire cock in their mouth, in and around their mouth, Dave. They're like, yummy. Fill me up, daddy. Shut up. I'm eating cucumbers right now. Too many billionaires is a symptom of a failed capitalistic system. Yeah. Well, that's because we bailed all of them out. If you ever become a billionaire, Greg, I'll feel very conflicted. It's still gonna be like 15 more years. Don't worry about it right now. John Steinbeck said it best. Socialism never took root in America because the poor see themselves not as the exploited proletariat, but temporarily embarrassed millionaires. I've been to rural China twice. They're doing fine here. We're doing fine here. Yeah. Yeah, what he said. 30% over the next 15 years? That'd be nice. I like that you reverse mathed it, but you hold on. 'Cause some countries with way lower GDP per capita have arguably a better standard of life. I said a GDP under 50 billion. I really went towards the bottom of the barrel for QOL. Like a country where you're not like, oh my god, I'm like, it's gonna be hard to make rent this month. It's like a country where you're like, I wonder what I'll eat next week after your meal this week. That's terrible, Potato Tom. Seeing dead bodies is the worst. I love rice. I love beans. I'd eat grasshoppers or something if they were crispy. All right. Did you make an appearance in Fubo chat because you have inside info on FuboAss? No. No. I just wanted to brag about my Celsius gains somewhere, and that seemed like the most depressed chat. So I didn't say I wanted to go to a country with a GDP under 50 billion. I just think that most Americans would be well served experiencing that. Most depressed chat equals buy signal. Yeah, but if you're not tracking Atomic's sold call positions in Excel, you're not going to know when he rolls. Next time someone wants to interview you for a movie, are you going to say yes so you can plug Gamma Strike? Listen, this channel's been shadow banned by YouTube for like the better part of 3 years. I don't think I'm getting asked to appear in any movies anytime soon. We've increased our subscriber base by like a net of 5 people. Will you be in my movie? I don't know. Middle Western consumer sentiment rep. Is it just a porno with you and JD Vance and a couch? Because in that case, no. Sounds like you need a wholesaler. Casting couches. What's the name of this technical setup? I mean, the price action here is a little bit distributive. It's not really any kind of technical setup. It's a failure of a like a bear pennant, at least for the intraday. Yeah. Well, maybe it hasn't quite failed yet. Let me see. Starting to fail the bear pennant. My catch support right here, but there are some downside gaps, so there's a chance that a failure is a little more likely. I can just show you on. Here, let me show you on WeBull. It's like that from the low of the day. Hmm. I don't know, what did I do? Oh, okay. Okay, but if you go to Fiji, you can't stay at a resort. You have to just live with the rest of the population. Same with the Caymans. Hmm. Have you rescinded your desire to flee abroad? Oh no, God no. I'm gonna just go live somewhere else with rich people where we can control the government and make it do what we want. Oh, actually, you know what? Maybe I should just stay here. See why I'm considering buying back that sold lag? Because IV went up? No. Need a really good confirmation of weakness. Somewhere civilized. Maybe we pull back and retest like 45. Fill both downside gaps. IV's moving up quite a lot right now. VIX is back above 21. Some of that's like event vol coming in, but event vol always gets really weird going into the, like, right into the FOMC meeting. Did they raise the margin requirements on futures yet? What time does that start? 1? Sure did. Yeah, okay. 1 to 3 p.m. Yeah. That's usually when vol starts to tick up. Chibo does nothing. Should we expect the market to rip? It should be bullish. I don't know if that's going to make us rip. But it's still twofold. It depends on the dot plot. If the dot plot is relatively unchanged and the Fed does not cut rates today, then they're projecting out into September, when the next cut should be appearing, that they think that the economy is sufficiently stable that they do not need to cut rates in the short term, which means that they think that labor is strong enough and that growth is within the confines of their expectations. What is this site we're looking at? Gamma Strike. It's the options data service that we made. There's a link in the description, I think. And it's fucking tonight. What is? Oh, tight. I see. Yes. Toit. What was the last time we went to FOMC below DN? I don't know. Probably like early 2023, after the bank failures, before the Fed bailed them out. You sound like you're scared of it. You gotta lean into it. It's one of those words that I despise, like hella. So I'm saying it begrudgingly, not because I'm I'm finna. Thanks, Sisyphus. No, Skibidi is fucking dope. I don't know what you're on about. I also don't like the word moist. Just sounds dirty. Hecka is much more reasonable and family friendly. Ew. That's why it rizzes the hardest. Yeah, I agree. Squab says heckin', and that's my favorite. Which is worse, moist or clussy? Can we not start with the clussy shit again?
Someone put their pickle in my jar. Could you take a look at MSTR for near-term price target? Looks like it's forming a big bull flag about to break out. Thanks 3.
MSTR, let's see, Gamma Max is 326. It's trading at 300 right now. 302 is a big resistance. I don't know. If it gets out above like 302, 305, then 320, 330. It's going to be really hard to get over 300. Well, it's going to be really hard to get over 305. Especially in the short term. 320 is kind of hard resistance too. IV's surprisingly stable on it. Yeah, I'd say above 302.50, 305, 320 would be my next upside target, and then 330 after that. I mean, it's obviously prone to breakouts, but be a little cautious with delta and gamma falling in the near term. It's probably a lot of call selling on it. MSTR. This has been stacked at 300 to 305 all week. Yeah, I know. Dude, my YMAX is almost back to break even. What did I get last week for my dividend? 10 cents? Hmm. They released the notes at 2 o'clock. Pressers at 2:30. Always.
Someone put their pickle in my jar. Would you mind looking over GEV in GS? 3.
I'm just looking over GEV. Yeah, we could take a look. Hold on one second. Watch 50 for support here. I don't have GEV in GS. I'm gonna go with because its options chain is like fucking empty. Hmm. It seems like all of the open interest on it is just like right at the money. I guess we could add this one. That's not too bad. How's the April OPEX? Uh, is there like some near-term event on this? Because there's no like OI further out on the chain, which is probably why we don't have it. Yeah. There's like very little OI further out on the chain. But no, sorry. I don't have it. I don't have it in here. I can take a look at the technicals for you, though, I guess. It seems like most of the options that have come in on it are kind of like betting on the bull run right now. Declining volume into the upside test. Needs a break at 350 to break out. I would say that right now, this still looks a little bit bearish, like it's gonna fail. So maybe a little bit of confirmation at like 337.75, and then like actual confirmation at 349.05 to out to like 383 to the upside. There's not going to be like any delta on it though, because there's no longer dated positions on the chain. So if it does break out above 337 and above 350, it probably won't last long. There'll probably be some profit taking on it. I hope that helps. Failure at like 310 is pretty bearish. But so would a fail. Actually, failure to get back to 335.29 would also be kind of bearish. Big drop in volatility on this bounce. What are we looking at here? Upside still skewed a little bit more favorably. Ooh, we're getting quite a lot of puts bought to the downside. We're supported by some bot calls here around 60 and at 50. There's bot puts 45, 40, 35. Bot calls 60, 70, and then 80, 85. The upside's a little choppy. Yeah, getting above 60 is going to be a little tough. If we can push out above like 67, it could maybe run up and test those calls. But I think 60 is going to be a little tough to get over. Also, Charm gets nasty to the downside here into the end of the day. If we fall under like 56.30, that's going to be rough. Look at that out of the money Vana at 710. Spicy. Also 5600. It looks like everyone's just trying to like straddle the tails or strangle the tails. It seems like everyone expects a really fucking big move today. Expect a big move? Let's see. 37, 122. Most of it on the nearer dated expiry. Maybe. We still haven't filled the upside gap from yesterday morning. Just a little bit odd, I think. Right? Yeah, we still have a gap up to like 74 that's not filled yet. Ooh, China's making decisions on their 1 and 5 year lending facilities tonight. German PPI in the morning. EU unemployment. Bank of England rate decisions tomorrow morning. Tomorrow morning is going to be crazy on the EU side. Philly Fed and jobless claims. Existing home sales. We got a 10-year tips auction tomorrow. Should be interesting. Last one was pretty high, 2.243. Japanese inflation tomorrow night. That'll be important. What happened with Nuke's meeting? He's like kind of fired, not fired.
BTK put their pickle in my jar. Thanks for the analysis on GEV.
Thanks for the analysis on
stuck in a
GEV. I got
naked
stuck in a
put
naked put right before everything went to hell a month ago.
and
It was assigned at $350. I have a 390cc sold for April, so we'll see how it goes. Okay.
For April, so we will
Yeah,
see how
careful
it
with the
goes.
liquidity on that shit because it looks like there's a little bit of risk further out. The spreads are probably completely fucked. I think most of the current options interest is like expires over the next like 30 days. But yeah, no problem, man. Thank you so much. I didn't fire Nuke. Why would I ever fire Nuke? He's my buddy. Don't let Nuke get a new job where he won't have as much free time for GS dev. No, I didn't fire. God, I didn't fire Nuke. You're still leaning towards bear rally because this has been weak as fuck. All I know is that Charm is a nasty bitch into the end of this week, and Bulls don't have it high enough to defeat that yet. New game, yes or no answer only. UMAC buy below 5. I'm gonna give you an answer that is neither yes nor no. Drones? Oh, this is the drone shit. I don't fucking know. We don't make money. Who gives a shit? It's also $7.50 right now. It seems like if you were gonna buy it at 5, you missed your shot. They get me kind of like Litchfield Hills initiated it as a buy. They're gonna buy out drone software firm Aloft Technologies. Short seller, the CEO warned of a short seller attack. That's got scam written all over it. Where do bulls need to get it up to again to have a chance against Charm? I mean, first step is above delta neutral, right? Because then it'll be past the flip point on the monthly expiration. Um, but I think like out above 57.50. Jesus, look at all of those fucking puts. These are all underwater. But yeah, I mean, to squeeze, it really needs to get like up here, like 58.75, like into that higher concentration delta. This looks fucking terrible. $200,000 calls are falling off at 5,000. Another 141,000. Oh shit. Is this going to be the expiration for the... Hold on. Is that all of the big synthetic longs? This month and next month. Or no, June. 321 in June. Some of it's rolling out. Not as much. Hmm. Interesting. That's a lot of delta. Holy shit. Ew. Dork. What is that gammon curve? I don't know, I'm gonna find out. It's either accurate which would be really strange, or it's very bad IV values being given to us by SIBO for the SPX chain. Okay, there's the 45 test. There should be some like a little bit of support here. Looks like there's some interest coming in at the 5650 strike. Oh, ow. Okay, maybe that interest was not bullish. Fuck. That was rough. I guess those might have been some bot bets. Oh, let me see something. Yeah, we got bot puts 45, 40, 35 to the downside. So with the slip here, maybe 30 or 20 support. That'd be rough. Watch for bounces though between like 40 and 30. Fucking gamma's really flat there. Maybe look at delta. Yeah, delta falls off really hard at 30. Probably stay stuck to 45, but if we could slide down to 30. How's that gonna affect charm? Not too bad just yet. Alright. Boop. As an inverse, I see a decent play for a high IV event like this. Kind of, yeah, I mean, you're kind of just like strangling with a hedge. It's like a debit strangle. The returns on them usually suck. Hmm. MNQ still holding 19.8 a little bit. Hmm. Two standard deviation puts are 3x the cost of calls right now. I know. I have some like 55.50 puts that are up like 70% right now. Not anymore. Well, I had some puts. Yeah, they were just 0 DTs. The IV's insane, so it was just scalping that. I bought him at 140, closed at 250. Can we see that wide of a move? What, 55.50? Sure. One of my new favorite pastimes is pausing the stream for like 25 to 30 minutes, then listening to your past commentary play out over and over. Swear to God, you're a wizard. What mean 501c? And can Downs do much with the BOJ and rates hedging for that meeting when spread drops and leverage goes the other way? Can we get more? 501c3 is like tax exempt institution filing. It's a joke about becoming a church. The BOJ decision was nothing, which is what I said it was going to be yesterday. BOJ, like the Japanese inflation tonight. Well, it's either tonight or tomorrow night. I forget. I think it's tomorrow night. Japanese inflation tomorrow night could change like swaps perception of the BOJ hikes at the next meeting. Especially if their core remains elevated, like core inflation remains elevated, it's probably going to indicate that there's a far higher likelihood of them raising rates at the next meeting. Why are puts so expensive? Because VIX is at 20.8. Also, there's a lot of demand for puts. When you do that kind of out of the money GEX scalp, it's not really gamma, it's just playing the increase in IV. What kind of leverage do you use so people understand you're not YOLOing 10K? I don't know, I had like 22 contracts. I had an order for 25, but I only filled on 22. And then, like, it moved up too quick for me to get more. Is 20 too wide for a put spread here? Does vol dictate what the width should be? You'll have better volatility exposure the wider you are if you intend to close it early. If you're trying to like toe ring it, then narrowing your spread reduces your risk. How are you positioned for the Fed meeting? I have a straddle, and I have some, like, out-of-the-money shit for the tails in case it goes crazy. I have a straddle that I opened yesterday, so it's, I mean, the call side of it is very heavily favored right now. But I think I pretty much hedged off the losses from the put side with the 5550s. So I bought some puts to hedge off the downtake without having to close my slightly longer dated puts. I don't want to listen to her fucking talk. Ooh, failure at 45? That's not good. Do you have any favorite Italian pastries? Sfogliatella and cannoli. Hands down. So I'm pretty sure you hate cannolis. No, not at all. Ooh, nice. Get both of those things. They're amazing. I just looked up whatever word you just posted, and it looks amazing. They are. What's your outlook on rate hike, pause, cut? I wrote it up at the beginning of the week. What's JPL doing in this moment? Getting hyped up on Four Locos? Yep. How do you pronounce it? I don't have the buds in if you said it already. It's Sfogliatella. Sfogliatella. No, that's wrong. Sfogliatella. There it goes. Don't just spell it, dick. Bless you. Thanks. It's weird because you have to do the part with like the back of your tongue, which you don't do in English. It's like speaking Cantonese. I hope to see one IRL one day and remember how to ask for it. Don't you live in Chicago? Or near Chicago? Mm, Giardino del Dolce in Montclair. There you go, John. You're not watching the presser? What? Oh, I don't want to watch that fucking ignorant bitch. I'm not gonna let her sour my seeing J-Pow later today. She's the most... Poopy just wants to fuck her. But that's because he has, like, low Ohio standards. Low Ohio standards. I'm from Ohio. Would not do. Thanks for weighing in, C-Mill. Poopy standards are, do they have legs? Yes, no. Is it a shock that I don't like her? I really dislike willfully ignorant people. And she's like the epitome of that, like overconfident, willful ignorance. She's like a Midwest 5. Poopy's going on about being in love with the White House press secretary. You need to spend more time in the Midwest. No, I don't. Yeah, FOMC at 2 o'clock. Seems like Trump has a type. Subservient, delusional, religious Karens. I never listened to the other press secretary. The only time she was ever on the stream was after the Ukraine war started. I don't even know her fucking name. Life's not fair. Complain about being a victim more, poopy pants. Stop being a snowflake. I stand with women while you discuss her ranking and whether you'd fuck her or not. Classic. The required initial capital outlay be comparable for sell-side derivative in comparison to the underlying securities? No. I would never make love to her, Kirk. I'm married. Uh, what's up, Nick? Why don't you hit a little refresh in GS? Perfection. If you know, you know. I'm not even going to say what changed. Whoa, damn right. Now everyone can stop yelling at me. I'm glad that's finally sorted. That was fucking annoying to listen to people bitch about. Nope, get fucked. It's where it should have been to begin with. I'm just playing in the timeout with the timeouts. I hope you're happy, Greg. I got your simps going with your rizzed up skibidi brands. You're one of my simps. If everyone else is, then you are too. You don't get to segregate yourself. Shh. JPM's Michelle says the Fed is in a tough spot when looking at inflation. 6-month highs and lows, one print from each other. Ah, it's easy to read. there a reason that we sold off, or just a double top? There was no like driver, if that's what you're asking. It was just mechanical sell off. We hit resistance and failed. Then lost support at 55. This page looks so fucking clean now. It looks a lot cleaner. I definitely prefer this. 5,700 or 5,500? Which would you pick? I don't have to choose. Both. I know. Why don't you just wait until the decision and like pick a fucking direction? What is wrong with you guys? You act like the fucking market's just gonna like not do anything after the Fed meeting. God damn, the pickle jar and its biases are insane sometimes. We're solving an addiction, not living off our ports, Kirk. I have ADHD. I'm addicted to drugs. That just sounds like a butterfly. I have 120, 125C on NVIDIA. That's sad. I'm made entirely out of pancakes. Oh, okay. Yeah, I believe that. Name which way I'll choose for SPX. Poots. Wonder if I should like 100x short BTC. It looks so bearish. Holy shit. Does post FOMC data generally give an indication of whether we're headed straight in one direction or if it'll move hard in one direction, then immediately back, as sometimes happens? Depends what the Fed does and what the dot plot says. It's completely random. So, I mean, I would say that if they push forward cuts in any way, that could be very short term bullish, but long term bearish. I think if they cut, that would be very bullish short term and then extremely bearish uh, over the coming weeks. And then I would say the most stable decision and the one that's going to promote the most confidence is like a dovish pause. Like, we don't see any reason to cut rates right now. We're going to maintain, but we do plan on cutting rates in the future as previously planned or at an accelerated pace. But there's a multitude of decisions that could be made today. There's a lot of variance over the last like 3 inflation prints. We had like one of the highest prints in the last 6 months, and the lowest print in the last 6 months over the last 2 months. So I would say that the Fed is not really in a position to do much. Well, the only thing that would actually be long-term bullish would be if the Fed raised rates. And they're not going to do that. They should raise rates. The dollar is weak. Weakening. I know what it was. Dirty little toe beans. Raise and completely discredit themselves. I mean, if you understand anything about monetary policy, they've discredited themselves so many fucking times already that it really doesn't matter what they do anymore. All roads lead to further dropping. We could continue the bear rally if they pause, like a dovish pause. Hawkish pause. We might not move up enough by OPEX to offset the charm. No, I think the dot plot will determine whether the pause is hawkish or dovish. So the pace of cuts moving forward. What about a hawkish cut? Those are my favorite. That's what we did last time. When the one guy abstained, remember? That was the hawkish cut. It didn't work out so well. I mean, just whatever Jay Fresh is saying about the economy, probably the opposite. It'll be the opposite in the short term, and then correct in the long run. Dovish continued QT increasing rates inflationary. Hawking QE. We're not going to flop from QT to QE. We would just stop QT. Decreasing rates, labor strong. No QE. I don't think QT needs to be brought up yet. Not until September. Maybe June, but unlikely. Is it dumb to buy TQQQ instead of options on QQQ for a short-term bullish move? It's not dumb. I mean, if it's I mean, you'll make more money on QQQ, but the options will be more money also. Maybe a good time to remind everyone that FOMO is real and they need not play at all until a direction is shown. Yeah, and IV crushes. I've already said that today multiple times. Don't play binary events. You'll just lose money. The market maker is the winner. And you guys can't sell short strangles on the SPX, so just fucking wait. Just wait till it's over. A trend is established, and then let that be your buddy, your friend. Be friends with the trend. I'm gambling. Yeah, I know. You know it's too late. I don't know why I have to say this at every fucking FOMC meeting. You'd think you guys would get it by now. It always starts like 2 days before. People are like, hey, Gherk, you get a neutral position? Yeah, because I have a bunch of money, and I can sell naked strangles on the fucking SPX. But you're like sitting there with your like $5,000 account trying to buy the two out of the money options you can afford. That's not going to work out well. Sorry, Nuke. It was a direct attack. That's why you feel attacked. You just offended a lot of people. I'm only here to be offended. Debit spreads are safer because your capital outlay is significantly lower. You guys have $5,000. Nice, Patrick. Roadhouse. If we move 5% in either direction, money. Oh, Jesus fucking Christ. At this point, everyone should be closing their binary position to reap that sweet IV increase. Yeah, actually. Sawsboss, welcome to Dillionaire, man. Hit me up on the Discord. I'll get you added after the stream, dude. It's out. We go with no rate cut. 4.5 versus the previous 4.5. Forecast current 3.85. Previous 4.375. Fed median rate forecast 3.375. 2-year 3.125 versus the previous 3.375. Median rate forecast, long run forecast 3% versus the prior 3%. So shifted up one rate cut, it looks like. So the median path is to 3% over the longer run. So yeah, so just under 4% by end of year. Although that decision seems to be extraordinarily split. Here's the dot plot. Treasury redemption cap will decline to 5 billion from 25 billion. Monthly redemption cap on mortgage-backed securities is unchanged at 35 billion. Fed vote on policy included one dissent from Governor Waller, who supported no change on policy rate, but preferred no change to balance sheet runoff. So a slowdown in balance sheet runoff. So still QT. But a 20 billion reduction in total runoff from 60 billion. And then Waller dissented on that. That's pretty mixed. Long run Fed funds rate still like sitting around 3%. So not as bearish as forecast. But moving up a rate cut could be a little bit concerning. Fed fund futures for September are flat still at 0.33. Ooh, we're gonna have to wait to the presser. Interesting. Fed median view of funds rate at end of 2025 is 3.9%. Longer run is 3. Unemployment projection rises to 4.4%. Yeah, that's not particularly great. Raising their unemployment projection means that the additional rate cut that they're pushing into 2025, barely additional rate cut pushed into 2025, does not have a positive connotation. The Fed omits language about goals being roughly in balance, growth projection, and marks up inflation. Reduces 2025 growth projection and marks up inflation projections. Uh-oh. Uncertainty around the economic outlook has increased. Okay, so this is like a hawkish pause. Yeah, this isn't a dovish pause. Not with the uptick in inflation and unemployment projections. The most bullish thing here might be the slowdown in the balance sheet runoff, but it doesn't start until April 1st. And that seems like it's directly in response to April 2nd tariffs being implemented. All things considered, this is probably the best that anyone could have hoped for. No, there was a better potential outcome. A slightly more dovish pause with one rate cut this year would have shown significantly more confidence in economic projections. Also, removing the language about the Fed's goals being in balance is gonna really upset the bond market. This is not great at all long term. No, it's kind of an admission of stagflation. Project a reduced growth at GDP for 2025 at 1.7% versus 2.1 in December, and heightened inflation expectations. They did say the economy continues to expand at a solid pace. Hmm. This is interesting. I mean, if you factor in the positioning, Fed Fund futures moved to a 62.1% chance of resuming rate cuts at the June meeting. Projections imply 50 bips of rate cuts and 50 bips more in 2026. 4 out of 19 officials see no cuts in 2025. 4 see 1 cut, 9 see 2 cuts, 2 see 3. So, like, 1 and no cut are really kind of split with 9. Fucking JPOW. JPOW's definitely one of the 2 that see 3 cuts this year. I think a recession's probably better than stagflation. JP Morgan's Michelle says this is a dovish Fed. How? I guess, alright. Yeah, the rate cut projections for 2025 are a bit. I don't think that's dovish though. I think that's. Yeah, we'll have to see what JPOW says. If the presser kind of reveals that the projection for more rate cuts this year is due to economic uncertainty and and unemployment being out of balance with where the Fed wants it, then it will be seen as hawkish. Well, I guess not hawkish, but bearish. Hmm. Some of the vols falling off. We still got 18 minutes till the presser. 5750, here we go. Now that I'm out of all my calls to the drop, 5700 possible. Yeah. Why isn't Gex equal Gex? God damn it, Nuke. I mean, it technically does. The lines just aren't matching. The values are the same. Different scales on the axes. What's up, Popcorn? JPass said the same thing. He said, we've crossed the Rubicon. He fucking did not. I'm playing the Gex arbitrage. Are you the kind of guy that buys a whole wheel of Parm to make Alfredo? No? I wouldn't even really... I guess you can. You gotta get, like... Pecorino's better for it. Do you ever feel like Icarus? No. Well, sometimes, but no. Isn't Alfredo the one made in the wheel? Alfredo's not even Italian. It's if I can... It came from, like, Chicago or something. A little positive delta here. But resistance at 65. I would say the IV to the upside is like starting to see a little bit of demand, but it's still skewed to the downside here. So careful of rejections. You get this fucking new Dillionaire song finished. Hmm. Hmm. SCX gap at 48. Yeah. We might fill that before the presser. Those suck. To be clear, is this bullish or bearish? It's the... I mean, so far it's pretty mixed. I think a lot of it's gonna just depend on what J-Pow has to say at the presser. Not a lot of confidence. Well, okay, it's slightly bearish, but bulls could gain confidence depending on what J-Pow says. So I'm trying to... Crap. Mm. Yeah, the cut in QT is dovish, but the timing of it's suspicious. Still have some June puts. No. I have some Friday puts. Mm. Why is there no sound? Oh,
Somewhat
there
elevated.
we go.
In support of our goals, today the Federal
Jesus, he's
Market
quiet.
Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following
Do you guys
the rapid
fucking hear
growth
that?
seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year.
I'm taking interest at
The jobs to workers gap
75
has held
and
steady for several
56.95.
months. Wages
I'll say
are growing faster than
57.10.
inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February.
Yeah, he's no. It's
Excluding
the stream is
volatile
super
energy
quiet.
categories, core
I have it
PCE
like
prices
blasted
rose
right now, and
2.8%.
I can barely hear it.
Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. And today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation.
Is that a darker purple
It is the net
tie?
effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy
Eggplant
stance
purple.
in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance
Well
sheet over
positioned
the
to wait for
medium term.
greater clarity. Yeah.
The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations
The mention
well
of
anchored.
tightness in money
Our
markets
success in
is
delivering on these
interesting.
goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard.
So are they maintaining because they want to
Howard
keep
Schneider
money
from
markets
Reuters.
stable?
Thanks for your time. So 2 things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and
Losing
depend
60s
critically as
bearish.
well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also, doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know.
Oh
that.
God, good ship
We're gonna have to
transitory is
see how
back in
things
the
actually
harbor.
work out, and the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset.
Oh,
And also,
say it.
Frankly, a little bit of inertia.
Say
when
it.
comes to
Crash this
changing
bitch.
Something in this highly uncertain environment.
Don't say inertia. Say
you're-
stagflation.
I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you, Colby Smith with the New York Times.
Weaker growth
You
and
just
higher
described
inflation.
expectations
Fear.
as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by
You know what
businesses,
would have been
households, and
fantastic?
forecasters?
If
So
J-Pow had just walked out
we
wearing
monitor
like
inflation
antlers,
expectations very, very carefully.
just like an antler hat.
Source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this: you do see increases.
He literally
broadly
said
in
everything he
short-term
possibly
inflation
could
expectations.
besides
People who fill out
stagflation. I
surveys
know.
And answer, questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New
That's
York,
not how the
for
consumer
example,
feels.
Then you have market-based, and it's the same.
Or the
pattern,
bond
where,
market.
people
Ooh, the
in
TIPS
markets are
auction.
pricing in break-evens.
What was the TIPS
Some
auction?
higher inflation over the next year must be related to tariffs. We know from the surveys.
Is that
But if you
tomorrow?
look out 5 years or the 5-year
No,
forward,
it was today,
you'll see that
Oh, no, it's tomorrow.
break-evens are either flat or actually slightly down in the case of
Yeah, the
longer
TIPS
term
auction
ones.
will be
So
really
we look at
interesting.
that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place. to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmeros, The Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses...
Then cut his mic.
You see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. You know, I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27. Of course,
$3 off of delta neutral.
I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at the they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025.
I mean, not directly bullish
Up in
over
unemployment
GN,
rates and
but
not much
things
there.
get more
But
bullish.
core inflation up by 0.3, and so those two kind of
Delta on the
just
monthly
kind of
contract
balance each other
starts to
out. So
turn
people-
positive,
not
but it's
everybody,
not
by
substantially
balance,
positive at that
people
level.
wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman.
He hasn't really said anything that's like bullish. It's
There's
there's positioning.
low enough to bring people in from the sidelines in terms
But
of hiring.
if you'd said something actually bullish, we
Hiring
would have
rates
gone
and
up
stuff
significantly
in
more.
2024 levels. So what's going on there?
Yeah, so
Only like $20 higher than we were after the statement and SEP drop.
Accounting for aging. You've got wages that are consistent with 2% inflation.
So the Fed plans to return 2% inflation 6 years after we exceeded the limit. Can we safely call that a failure to maintain price stability? Yeah, they already said that. They removed their wording that the balance of expectation, like that.
So you're not seeing people losing their jobs, but you're seeing that people who don't
The
have a job
Fed
having
was
to wait longer and
Fed's
longer.
expectations were in
The
balance.
question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too.
This is just a
overall, it's labor
bullhorn
market that's
area.
in balance,
Might
and
be.
we watch it very carefully.
This isn't like,
Have we seen
I don't
the
know.
administration's- the new
This speech
administration's
is
policies in
very
economic
weighted.
numbers yet? And when do you anticipate?
like in the short
In
term,
labor or
no
in
cut
labor?
should
in
be
labor and inflation, just across
something
the
that the
economy, have we
bulls
started
can
to see
lever up.
the new policies take effect in the
Like the
numbers?
front end isn't going to fall substantially, and like
Only
leverage should
kind of an
remain
early way. I mean,
relatively
for a few months,
high.
right?
Also,
So,
heightened
for
long-term
example,
inflation
the
expectations
layoffs that are
will help
happening
support
here,
a stronger dollar.
there's certainly
But,
people involved, and they may be
In the
meaningful
long
to-
run,
to
the
the
realization of
neighborhood
those
or region
inflation
or area,
expectations are
but at the
very
national
bad.
level, they're
So,
not significant yet, but we don't know. We don't know how far that.
Yeah,
will go.
the
We'll
dollar's
find
been
out much
falling.
more. I mentioned that you saw
Lack of
you've got
faith.
two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with, people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture. Because so much of it is indirect.
There's a little bit of
great
support at
example
70
is,
right now, but if we lost
their
70,
washing
yeah, we
machines were
could
tariffed in the
slide back again.
last round of tariffs, and prices went up, but prices also went up on dryers, which were not tariffed. So the manufacturers just, they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that.
You mean lack of policy?
It's too soon to be seeing significant effects in economic data.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because you
pandemic.
could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect, by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus.
Gap from Monday's overnight drop is filled.
It's a very challenging,
Thanks.
situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment, because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really shows significant problems like that.
I mean, there's a little bit of resistance
Just
here,
to
but
follow
not
up,
nearly as much as there is at
UCLA Anderson forecast that
56.95
recession.
or
Where do you stand on
5700.
whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional
And we're just
probability
over delta neutral right
possibility
now.
of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood
Strong
of
goods
recession was
inflation
extremely
reading in
low.
the
So
recent 2
has
months have
moved up,
been
but it's not
persistent.
high.
Must be due to tariffs.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I have no desire to change that answer and have nothing new for you on that today.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation.
Really, or is it just an indicator of how strong price gouging is?
I would just say we look at all of them.
If the consumer's feeling double the rate of inflation the producers are feeling,
unless we take notice of it.
I think that's statistically relevant.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough?
Support at Delta Neutral
unless
here.
you decide to be preemptive.
Yeah, look, we're aware of the
to the fucking penny.
Things that are going to evolve in the time frames and all that, and we will use our tools to foster achievement of our goals to the best we can, and of course we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft
Not a lot of
data
change
and
in
high
Delta
uncertainty.
on this move up
And we're
either.
watching that carefully, and we think it's a
Where can we
good time
go?
for us to wait for further clarity before we consider adjusting our policy stance.
Yeah,
Do you think it's going to be hard to
59.95,
get clarity in the
5,700 are far
government
more
tweet? I mean, do you
significant
have a
resistances than
feeling that at
anything
some point
locally.
You actually will have a forecast you can trust?
A loss of DN to the
Yes, I think we
downside
will.
opens up
It's hard to say when that will
some
be.
room to slide a little bit.
These decisions are going to be made.
So it looks like there's some
and they're
in the
gonna be
money,
implemented, and then we'll
maybe
know.
some in the money
At that
profit
point, we'll know
taking,
what the
but
decisions are, and
Charm's
we'll have to make assessments
Charm's
then
not
about their,
really a big
implications
negative
for the
here, I
economy.
don't think.
Those things will
Plenty of
happen
in the
a lot
money
and will happen
calls.
over the course of, in coming months, certainly over the course of this year.
To the
And
upside,
we'll be
calls out
adapting
of the
as we
money
go.
or not weighted a little more thinly. So
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation.
But
Can you
rejections
walk us
could
through
still
what
be
that
really
looked
nasty
like
here,
over the last
so
couple of months, if
just
there
be
were
careful
specifics
on
from the
pullbacks.
January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that, you're reading about developments. The
think
news is
that's
full of
being
developments
sold.
of tariffs being put on and taken off and things like that. That's some of that is noise in the sense that it's
Not
it's
heavily.
not really
Some
telling you
in the
anything.
money
You're trying to extract a
or
signal
out of the
from
money
that, and the
calls are
signal
being
is
bought back,
what's gonna be the
so
effect
sold
on
calls are
economic
reducing to
activity,
the
on
upside.
inflation, on
But
employment,
there's
and
some
all those
bot
things.
puts at
So
95,
that's what we'll say,
5,700.
sorry, the second thing
There's
is-
actually some put buying
or
going on to the
similarly for tariff
downside at
inflation, non-tariff
85,
inflation, ways that you're
80,
making the decision.
75, and
Certainly a
70.
special case of that. The idea being, And I
So
think
yeah,
things
we're
like
starting
the first
as
2 months this year are a
as
great
the long
example.
calls
We've
take
got
profit.
high readings
We're
for
starting to
inflation
see
after
some
a
long
string
puts come in,
of
which
readings that average
could
close to
which could
zero. And you
kind
have
of
to
pull
ask
this
if it's
back
coming
a
during
little
tariffs,
bit.
But you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs. But it
I think
kinda
he's
has to be to some
spoken to
extent.
stability
Plus
enough
noise.
that
There
the
can
bulls
be
are feeling a little bit more
readings in
comfortable
various
pushing
categories
things
which
up.
will shortly reverse, and that happens
But
too.
whether
If
this
we-
is like
if
a
we
rescue
see- I think
mission
we'll
to
know in a
grab the
couple of
top
months,
side
we'll
of
know
neutral
whether those were-
positioning or not,
where that
it's
really was from, but that's
it's
another
too
case
early to
where
tell.
I think it's going
If
to
we
be
start
very,
to see
very
like the in the money
challenging to
calls collapse,
unpack the
that would be
inflation we
be
see
more
over the course
bearish.
of this year, and be able to say with confidence how much of that came from inflation and how much of it, from tariffs. and how much of
Hold,
it-
but really, really
that's what we'll be
super
doing. We'll be
mixed
doing that, so will everybody
expectations.
else, and we'll all be
Like
trying
lower
very hard
growth,
to
higher
make
inflation,
that
higher
assessment.
unemployment.
I'm sure we will make a lot of progress on that, and we already have, but it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for.
Don't forget
direct
tomorrow's
evidence
Thursday,
that
so the weight of the
particular pieces
AM,
of
the AM
inflation
expiry and
are
the charm
clearly
from that is
not
going to be
caused by tariffs, for example. If it's
reaching
something
its
that was,
like zenith.
in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, which for some time was.
You don't know what to
kind
look
of
for,
our
AJ.
problem. Now it's slow.
Just look
It's
at in the money
definitely,
delta
moving
reducing.
down in a very good way. It's more now with goods and to some extent with.
Like if in the money delta
housing
falls
services
off in a
inflation.
strike below spot, that's an indication that in the money positions are
Consumer
closing.
sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation.
NQ gained
There was inflation in
20,000.
21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got.
Is this a
2% growth.
joke? The Fed's been a
It's
joke
a pretty good
since
economy,
they started
but
cutting rates.
People are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And
AJ,
we get all that, and we
don't
do
tell me
understand
about
that
your
sentiment
feelings.
has fallen off pretty sharply, but economic activity has not yet, and so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify, you were talking about how...
Explain pants.
A good part of the uptick in the inflation forecast.
Full-length penis
what
cover.
That specifically refers to, is that the tariffs that have already been put in place, is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind,
Leg curtains.
talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so.
Are pants a burrito? Not really.
On core inflation this
Leg
year.
holsters. I like that.
Flatlining, going sideways.
Shorts are the fingerless gloves of legs. I hope that helps
How
popcorn.
much of it is not? But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already. All forecasters have.
I prefer to use a palm frond, Dave.
Core PCE inflation, core CPI.
That way you
inflation
can
this year.
tuck it
Without
behind
exception,
also.
without exception. So it's
You get the full
I can't
wrap.
tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it,
You know what's
really
pissed
came
me
to
off
the view
most about
that
this?
this was a good time to make the move that
We haven't gone up enough
And,
for my 5,700 calls to print substantially because of the drop in IV. And then the
view
second
that we
thing
would do the second
is
we'd already
that
done, which
this
is
has
the balance
interrupted
that
me
we, I guess
finishing
in
my
June,
new Billionaire song.
was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. Now, of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire. Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that's higher, but the other survey readings and the market-based readings all show relatively, well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, what speed, there's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down, they tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
Here's a quick QT question. Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because, we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon. Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed the line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, it lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying the sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember, but we're past that. Or sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from higher levels to pretty close to 2%. While the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Underlying inflation is still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter, so I'm gonna pass on that one. Thank you.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France-Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens? It will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Hi, Chair Powell. Jean Young with M&I Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. Slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we've said
had
we would
enough
do.
of Elon shit,
So
and I
that's
hope
why
he gets
pretty
saucy about it.
support. I just say it's nothing to do with monetary
Retest at
policy,
5,700
nothing
here.
to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
Profit taking starting to erode support. A little. Alright. I kind of missed some of the comments at the end there, but let me see if I can placeholder forecast. The effects of tariffs. I don't see a reason to think we're looking at a replay of the 70s. Oh boy. Well, we can't get a replay of the 70s because we're $36 trillion in debt now. No halting in MBS runoffs. Let's see what we got going on here. A lot of profit taking on calls on that upside move. Put spot at 705 and 57.15 on the test. At the money calls at 95 and 5,700 with sold puts at 5,700 to the upside. Bought puts at 56.80. So I think as long as bulls hold 56.90, they should be able to push back up. This gets real sketchy if we fail delta neutral to the downside. I mean, yeah, a lot of profit taking. Profit taking still a bitch. Like anytime you get profit taking, even above DN, right? We're still very, very negative gamma. We're very negative delta on the weekly chain. There's like a broader scope to these positions. Especially on a day like today. You have to look at the longer term stuff. Can't just focus on the zero DTE. Zero DTEs shockingly don't control the entire market. They're just really good at controlling intraday spot. Damn. See how you can now see like delta to the downside starting to fall, 85, 80. Gamma's falling off to the downside really fast. It's not a great look for bulls. It's all called, don't they? Alright. A little bit of support. Right at like NQ 20,000. Yeah, this is an important test. ES 5744 NQ 20K. I think if this fails, you're probably get a pretty decent dump. Also important for support, but we'll see. What pulls price down? Delta. Like a delta falls back to 0 at 680 on the monthly chain. So that's like the AM expiry delta would be falling back to 0. Also, Gamma doesn't move Gamma doesn't move price. Price moves relative to Gamma. Fed admitted lower growth, higher inflation, put same rate cuts, i.e. recession with high inflation, i.e. worst case scenario. Yeah, I don't think that I don't think that the narrative out of the meeting was all that great. And the more the profit taking that occurs here, the more it looks like a rescue mission. At least I got stopped out of my 5700s. That was nice. I do not have puts for the downside though, which maybe I should have gotten. I wasn't at my computer. Gerb, what's up? Why not 6K? Why would we go to 6K? 59 would have been more reasonable. If Bulls had gotten a handle on this at the beginning of the week. Like I said they needed to. I can only do one big number. I understand. Slipped delta neutral. Are we getting that weird shit where like we don't get end of day candles again? Dude, what the fuck is wrong with SIBO? Okay, bounce on DN. A little bit. A little bounce. Okay. Oh, and it failed. That's bad. Yeah, that's a bad look. And that's fucking okay. Well, the profit taking is insane. So, I'm not sure where we'd find support down here. We could slide all the way back to like 55 or 50 even. We got what, 30 minutes? Let me switch charts so we have live update. I'll let you guys know if that kicks back in. It did yesterday, but that was fucking annoying. We're still getting... $330.05. Okay, so we're still getting options data. You can still use these. You just have to remember where spot is. Trump time? Oh, is Trump talking now? Really? You fucking held a presser after the FOMC meeting? Dude, he really wants to just crash the fucking market. Fuck. Oh, that bitch. Nothing live from the White House. Does anybody know where he's speaking? Oh my god, I nailed it. Okay. Wait, I need a dillionaire. No, I need someone to sign up for fucking dillionaire. How about a super chat? It's not as good. Hold on. Well, I linked it to the notification thing, so give me a second. Why can't I gift Dillionaire? I need to get rid of these other membership levels. Ha! We got one. Hold on. Why is it not working?
Welcome to the pickle jar where we send it all we cry. Slapping bids, selling rips. IV's high, so am I. Degenerates don't hedge, we just double down. Ride or die till the tendies come round. Moon or doom, ain't no in between.
Look, I didn't need 3 of them. I only have 1 song.
Pickles up, no guts, no gain. Billionaires rise, no risk, no rain. Pickles up, pickles up, pickles up. Sealed in the jar, legends are made.
Alright, well, I'll just play it 3 fucking times.
Welcome to the pickle jar where we send it all. Welcome to the pickle jar where we send it all we cry. Slapping bids, selling rips. IV's high, so am I. Degenerates don't hedge, we just double down. Ride or die till the tendies come round. Moon or doom, ain't no in between. One good squeeze and I'm living the dream. Pickles up, no guts, no gain. Billionaires rise, no risk, no rain. Pickles up, pickles up, pickles up, pickles up.
This is 4 times I gotta play it now?
Legends are made. Welcome to the pickle jar where we send it all we cry. Slapping bids, selling rips. IV's high, so am I. Degenerates don't hedge, we just double down. Ride or die till the tendies come round. Moon or doom, ain't no in between. One good squeeze and I'm living the dream. Pickles up, no guts, no gain. Billionaires rise, no risk, no rain. Pickles up, pickles up, pickles up, pickles up.
We do just double down.
Sealed in the jar, legends are made.
It only took us 4 years to get a sea shanty, but now we have one. It was shockingly hard to make a song that was worthwhile that wasn't 2 minutes long. But I think I pulled it off. The representation we needed. It'd be really cool if Bulls would fucking bounce this again, so I could get out of the last 5 of my puts. Pulled it off. Understatement. Thank you. I'll personally Venmo a crispy $5 bill to anyone who makes a shanty that's not AI. Listen, my talents only go so far. Alright, trash. It's not bad for AI. It sounds a little less... nah, it kind of doesn't. I don't know what that's supposed to mean. It is, yeah, it's good for AI. I was worried it would be too much, and then I was like, oh wait, no, it's perfect. Oh look, we have candlesticks back. Nice. Thanks, Sibo. I sold puts at delta neutral, and I got fucked on them for a second, but now I'm okay. Oh, that wasn't Dropkick Murphys? No, no. Although probably stolen from their music by artificial intelligence. Was XRT off reg show? I have no idea. Go look. I bought puts at 75. We are not the same. I sold them this to you. That's so cute. Look at us. Options Eskimo brothers. Is Song that like pirate dubstep band? One of you is gonna get fucked. Cobra got fucked. Whenever the music sounds good, but the lyrics sound like they were recorded on a crispy tape recorder in the rain, it's AI. That's because the only voice that AI can replicate with any accuracy is Taylor Swift. And anytime you try to deviate from that, it gets angry and confused. Song is the pirate metal band. Oh, what am I thinking of? What's the pirate dubstep band? Omnitica. AI is whatever the majority of people are in the data that it's fed. JPOW AI voice is so bad. That's how you know what's in your DMs. It's legit.
Popcorn Trader needs to be a moderator. He is correct. We have crossed the Rubicon.
We have not crossed the fucking Rubicon. I feel like bulls aren't pushing hard enough, and they need to push harder. Good volume on the uptick on ES. As NQ. Volume on NQ is kind of shitty. Why does nobody want to buy tech stocks? What's wrong with people? No Gherk, my puts, are they yours? Take them back. I already bought them back. Ice the trees. Welcome to Billionaire, man. Thank you so much, dude.
Welcome to the pickle jar where we send it all we cry. Slapping bids, selling rips.
Hit me up on the Discord, I'll get you added after the stream. All of you guys, thank you so much. Driver, DB, Lizard King, Trader of the Day.
One good squeeze and I'm living the dream. Pickles up, no guts, no gain. Billionaires rise, no risk, no rain.
Isn't Todd power cranking? This looks sad. 56.95 is top. It is supposed to be a sea shanty. Oh shit, we did limericks again? Hundreds of them. I posted a couple of them in the announcements channel, I think. I could have won another Steam gift card. There were no prizes. $5,700 test. I bought Echoes of the Eye with my last one. 11 out of 10. Highly recommend. Nice. I think I heard of that once. Where do bulls want to get this? Up. As much as they feasibly can. Let's see. They sold a shitload of puts at 5,700, so definitely above that. But probably ideally like 20 or 25. Not a lot of time to pull that off here, though. 15 minutes. With a gap to the downside at 85. Kind of questionable support. How's overnight? What do you mean? The fuck? What? Monthly DNs at like 5680. Looks like a lot of calls bought for Friday. But still puts to the upside of 5,700. And then above like 5,720 into Friday's expiration, a shitload of sold calls. I guess they could try to gap them in the overnight, but that would be the only way of substantially moving higher, I think. VIX is under 20, though. That's got to be a huge help.
Someone put their pickle in my jar. Thoughts on SLD OPEX charm impacting price action next week. Have bulls managed to stabilize the technicals such that we'd need some news catalyst for a next leg down?
No, I don't think they've stabilized things at all. I think we're going to lose a shitload of delta on the March expiry. And bulls are not really in a great position into Friday to hold this here. SLD started today, but so far I don't think we've seen any significant impacts from it yet. But it does carry out through Monday morning, so there's still a chance that we could see some selling off. I would say SLD starting from these levels, it's more likely that the profit taking and repositioning is going to be on the bear side. That'll help buoy markets a bit, but the negative effect from charm, I think, overwhelms that. So I can see us falling into the end of the week and then seeing if bulls reposition, stabilize into early next week. Possibly try to move higher into the end of the quarter. Support at 90s kind of giving away here a little bit. If it does, gap fill to the downside at 85 would probably drive a continuation back to like 80 or 75. So if bulls want to get it over 5,700 end of day, they need to hold the line here. Upside range is kind of trimming a little bit, but there's still some delta out to like 2025. Ooh. Delta at the fucking 95 strike just flatten out. That was weird. Oh, yeah, we slipped. Owie. Hey, look! Me and Cobra might both make money off the same shitty position. They haven't done that much hard work. None of this is taking into account NVIDIA holding the Super Bowl of AI yesterday. I don't think anyone gave a shit yesterday. I don't think they give a shit today. All NVIDIA did yesterday was announce a bunch of money that they're spending on shit that doesn't make money. They announced like... they announced like 10 different open source platforms. It was like the least bullish fucking Super Bowl of AI that they could have possibly hosted. Nobody even cared about their little Wally bot. It's true. Walmart Wally. There was a Wally bot? Yeah. Jensen had his own little robot. Damn, are we gonna close under DN again? That's fucking rough. Hmm. Well, the MM would like this just a little bit lower. Ooh. Can I do like a 10 wide butterfly at 70? 70? I wonder if I'll get a fucking fill on it. Leg down? Maybe. Hmm. Haha. Dion's at 5680. It's sorry, wrong one. 5680, 53. Oh, it's right there. It's on the chart. I guess it should have the number. Hmm. I'll make a note of that. Come on, just a little. Just stay right. Actually, you know what? Stay right here. Right here is perfect. Can I close under fucking DN with VIX above 20? No. Oh yeah, Cobra's got 75 puts. Sorry, I sold butterflies. Is Celsius going back to 90? Well, I would prefer it didn't go over 35 by the end of the week. Although, if it tries, maybe I can just sell more calls and stop it. Still up 1% on the day. Yeah, I don't think that's like a relevant gain. This shit doesn't look good. Yeah. Failure to fill the gap from back on the 7th still. Dude, what the fuck? Why is Delta Flip gonna fall below the Gamma Flip? This better not be doing anything weird at the end of the day. Okay, cool. Took a lot of profit taking. Could be bearish for tomorrow. No, 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 no. You stay at 75, you son of a bitch. Stop it. Nice. Ha! Perfection. Sometimes betting with Kenny feels so good. All right. So, closing kind of like right in between my expected move in the MMs. Just under delta neutral with cash VIX at 20, VIX 3-month at 2087, and about a 3% drop in VX. So still getting a lot of vol shorting today, and bulls did manage to push up off of the 2 standard deviation. We technically got a breakout to a higher high, but it failed to fill the gap, which could be actually kind of bearish. Like, this gap from the 7th is quite large, and going into the OPEX is probably still relevant. The fact that we failed to fill it, I'm not really a big fan of. We did fill the gap from Monday's close, but we still haven't filled that upside gap from the prior week. Closing below DN with elevated volatility means that there could be a greater demand for volatility into market open tomorrow. We are still holding above 57.26.25 on ES. However, this is kind of like a bear flag. And the fact that we haven't really broken out substantially higher and volume isn't really picking up significantly, both kind of indicate to me that the chances of this at least temporarily failing before finding new support are pretty high. Remember that we have all of those in the money puts out here on SPX. And tomorrow is going to be like, 1.5 DTE on these. All of these, are going to be, a lot of these are already at 1 delta, but everything above spot here, within like 2 standard deviations, is still going to be decaying out to 1 delta. And that's going to create a lot of downside pressure on spot, especially given that, we did not regain 5,700 to the upside. That's going to be rough. There's going to be a little bit of support at 5650, 5600, but I don't really think any of that's going to offset the decay. There's like 3.098 trillion total exposure right now, and a fairly significant chunk of that is going to fall off with the AM expiry, and then additionally, SPXW delta as well, which is significantly more negative to the upside, and really wasn't showing very many signs of improvement today. Although it will be better today, it's still going to be rough for these, like 5750, 5800 sold puts, especially if we lose 5650 to the downside. If we look at Charm into tomorrow's expiry, losing 5600, well, 5650 now that that's in the money, 5600, 5575, these are all very significant levels at which Charm will get worse even after the AM expiration. And definitely something to think about there. There's plenty of gamma to the downside for us to slide, and one could argue that the slope of gamma to the downside is significantly steeper than gains in gamma to the upside. So, this is all very relevant because the kind of peak of that put delta is still about 4% out of the money, or the peak of that put leverage is about 4% out of the money, and delta on puts increases massively. And so, any rejection, especially failures at major supports, can see upticks in total put delta between 100 to 300 billion, which is going to be really shitty for bulls. Now some of those losses will be realized somewhat, but that's all going to play a pretty significant role over the next 2 trading sessions. Yields fell pretty sharply today, especially around the belly of the curve, like 2 to 5 year. Both of those dropping substantially. The front end of the curve not really moving much. Doesn't seem like Fed fund futures are pricing at a very high probability of a Fed fund cut in the next 2 meetings, but still pricing in some probability of a cut in the September meeting. Dollar fell from its high also today after rallying a bit with the earlier ceasefire announcements. Commodities moving up. I mean, I think the one thing you could probably say here that seems certain is that the economy is uncertain, and gold seems to be really enjoying that. Oil did slide up a little bit. There's some geopolitical risk in the Middle East that's kind of ongoing. Israel broke the ceasefire with Hamas and began attacks again. So all of that little turmoil is driving a little bit of volatility in oil, but ultimately it's going to be tempered by both recession fears and Russian crude coming back into the market in more significance. Copper up, industrials up, still a lot of fear from tariffs driving prices higher on some of those manufacturing commodities. Correlation fell, actually closed at one of its lower points today, but we are starting to see that 1-month correlation is falling a little faster than 3-month correlation, and that might be a sign that longer dated dispersion trades that have come in will begin to erode. So we'll want to keep a very close eye on the 3-month correlation. Carry trade leverage had picked up quite a bit into the middle of the day, but fell pretty substantially from 8.7x to about 8.6, which is a pretty nasty drop right there in the last hour at the end of the day. But the forward yield on volatility also fell to one of its lowest points in the last couple of weeks and to close at 0.97. However, on the other side of that, we see the 10-2-year spread picking up really fast. So big spike in that, and volatility may follow as more buyers move into bonds and demand the long volatility hedge. Move probably a little elevated today. I don't think it'll get back over 100, but we should see it continue to fall with 3-month correlation. I think the Fed meeting may have added a little shock to that. Skew, we will probably see rise. I think most of the position long put demand today was probably fairly low. S&P with 36.38% of the index closing above its 20-day moving average yesterday. I would say this is probably going to move up today. We saw pretty substantial gains in tech and the R2K that were lacking on the prior move up, and that was mostly led by Dow. And so I think breadth is a little better today, but that could earmark the end of the pump as much as it could a continuation. So it's probably not a very useful signal. Correlation with VIX futures fell again a little bit today, but barely at all. So vol shorting still fairly weak. Definitely not doubling down on their positions, and definitely not selling short volatility heavily in the money. Fed fund futures for September fell to 0.35, so we're pricing about 1.5 rate cuts by the September meeting. So a little bit of hope at the June meeting for a cut, but that could erode really quickly, and but less hope for 2 rate cuts by the end of the year, despite the Fed's dot plot projection. Bear steepener picked up about 10% today, and we saw that over on the forward yield on volatility chart as well. So a little bit more concern and a little bit more flight to safety on the bond side of things. For the technicals, we have still failed to retest the 200-day moving average on SPX, which is now at around 57.46 to the upside, and would also represent a gap fill from that March 7 close. So that area for bulls from, you know, the high of today, around 57.15, out to the top of that gap at around, what was the close on that fucking candle? It was 57.70 is really probably a big bull signal. It's not only is it a systematic signal, but it's also, you know, going to be a big bull signal if we're able to cross it tomorrow, which is basically the last day. I think that we would have to cross it, and if we haven't pushed up substantially by middle of day tomorrow, the erosion, the decay in Delta is going to probably outweigh any potential buy pressure, at least through the AM expiry, and then they might get another shot at it Friday if they start to lever up to the upside. But if bears come in following the OPEX expiration, things could get significantly worse. So for tomorrow, we're going to want to focus on that 56.50 level. That's going to be really important for the bulls in maintaining upside and maintaining pressure on delta neutral on the monthly contract, and it'll also represent probably their most important point of support. If 56.50 fails, IV is going to rise pretty rapidly, and even more rapidly under 56.25 and 5600, which will, you know, amplify any downside move, especially with the effect of the charm decay. So that's where we are. Thank you guys so much. I will see you tomorrow. I did go over VIX correlation. Yeah, I covered that. You got it. All right, guys. Cobra, I hate you. I know, man. You could have just had butterflies too. All right. I'll catch you guys all in the morning. Have a great night, everybody. Later.